Hello, everybody, and welcome. So we're going to now move on to our external financial reporting and corporate social responsibility. Part two, what companies need to do prior to going public or being sold. So my disclaimer and copyright notice, the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties or the third parties. I do not claim any copyright that belongs to those third parties. So when you kind of look at this in terms of, what do companies need to do prior to becoming publicly traded? I'm going to kind of work a little bit backwards. And what I'm going to go through and work backwards is I want you to imagine that you are going through and acquiring a business. What would you need to see that business have? And when you acquire a business, this is something that companies use, something called a due diligence checklist. And thank you, Brave AI. A lot of this is where I basically pulled this up from. But why this due diligence checklist can be really valuable to you is that if I'm starting up a company, I'm probably going to have to need some of these things if I ultimately do want to be sold as a business. So here you go. Financial statements. Have these statements been audited? If I'm planning on becoming publicly traded, the auditing firm that I need to basically use is going to need to be, is going to need to be audited by and try to be forbidden.org. This is the Public Company Accounting Oversight Board. It was established in the early 2000s. This is basically if you're going to be an auditor of publicly traded companies, you have to be registered with the PCAOB. These are companies like Deloitte, accounting firms like Deloitte, Ernst & Young, KPMG, PricewaterhouseCoopers, Moss Adams. They have to be, in order for you to audit a publicly traded company, you have to be registered with a PCAOB. So if you're planning on going public and you are using an accounting firm that is not registered with the PCAOB, that is going to be a huge problem. So if I'm acquiring a company, they better have financial statements. They should be audited. If a company is having their financial statements audited, it also means that they may have to go through and have documented their internal controls, lots of other requirements that go along with financial statements. It's not just running something from QuickBooks. Has somebody gone through and performed an audit of those books? Because remember, if you're being sold to a company that is publicly traded, they have a requirement that your books are auditable, right? They have to be, you can't be having receipts out of a shoebox. You have to be able to audit those financial statements. Next one, tax returns. Does this business, have they been filing their federal tax returns, their state tax returns, any types of international returns? Legal issues. So, are there pending lawsuits? Does the company have different types of attorneys? Do they have a patent attorney if it's applicable? Do they have a securities counsel? Do they have a general counsel? Do they have, all those different types of things? Are there different legal issues? If there's a lawsuit that the company is involved with or a dispute, this could be a problem if they're trying to be acquired or they want to go public. Another one is, what are the backgrounds of all the people? Do they have clean backgrounds? Meaning that, Do the officers, directors, and investors, do each one of them, are they reputable? Have any of them ever been in jail? Have any of them ever been subject to a securities indictment? I can tell you from having been a CFO and or a board member since about 2001, I've had my background looked at countless times, and I've served presently on a NASDAQ listed company board of directors. So again, when you're looking at the backgrounds of who you are going to be dealing with, if I'm going to buy a business, I want to make sure that those individuals are reputable. What are the contracts and agreements? Have you gone through and were these contracts prepared by attorneys, or were they drawn down from the internet? Why do we use attorneys? Because if an attorney reviews or creates a contract and something goes wrong, then again, you basically have the ability to sue that lawyer, which is a great day. And again, what are we kind of taking a step back for a second? So if I want to go public, I have to have all my ducks in a row. I have to be ready to go public. These are the types of things I need to make sure that I have prior to going public. Next one here is insurance coverage. Do I have general liability? Do I have employment practices liability insurance? Do I have E&O? Do I have a commercial policy? All those things. Another one, customer relationships. Now, here's where you need to be very careful. If you're going to be acquired by a competitor of yours, they may use the due diligence process to get access to your client's information or to find out who your clients are. So you need to make sure you have non-disclosure agreements. If someone comes to you, they say, hey, I want to buy your company. I've got this huge wad of cash. Do not be blinded by the money, right? Do a background check on those that are going to be acquiring you. Very, very important. So another thing is over here too, is what are the relationships with your employees? Are the employees happy? Are they angry? What does Glassdoor look like? What type of benefits are you giving your employees? Are there any lawsuits? Are there any, like, do the employees have a claim on stock? You have to make sure you have all those things buttoned up before moving forward. Environmental compliance. Is the company you're going to buy dumping things into a river? Now, it's already not going to be happening, but again, we want to make sure that your company that you're acquiring or that you are is in compliance with all regulations, basic environmental regulatory compliance. Over here, corporate governance. What does the articles of incorporation look like? Bylaws, amendments, board meeting minutes. Again, do they have all those things? We're going to be going through those extensively in a later video. But for right now, again, as a corporation, do I have all those things? Intellectual property. Do I have patents? Do I have copyrights? Have they been filed? What's the status? Are they pending? Have they been issued? A business plan. So again, like with when you're acquiring a company, trying to understand what is their business plan for the future, this is really a way you can kind of say, hey, where is this company going? And this is always something you want to kind of be having updated. So over here, due diligence team. Again, if you're planning on acquiring a company, right, you're going to want to go through and make sure that you have a due diligence team coming through that basically, you know, is this transaction going to be fair to the company? This is not really required by the company, but the person who is acquiring the company. Now, also, if you're a company and you're hiring an investment banker, more than likely the investment banker, because that banker is going to go to all of their investors, they're going to want to send in their own due diligence team to basically make sure that you as a company say who you are. Are you real? Is what you're doing seen to be legitimate? So also, you may also have a disclosure to schedule. This is basically what other kinds of things, and you can probably find this online. So if you say, if you found, say, if you're a company that's being sold, and if you're basically a company that's going to be sold, and if there's a lawsuit pending, what you may say is, well, I'm not, if I'm going to buy the company for 10 million, if you say, well, company's worth 10 million, but there's this $2 million lawsuit pending. Therefore, we're going to hold back $3 or $4 million of the $10 million to make sure that that lawsuit can be, once that lawsuit's settled, we'll give you the rest of the proceeds. So it holds you as a company accountable basically for your representations. Again, if you're the acquiring company, these are the different kind of things that are going to work themselves out through during negotiation. And as I just showed you, using the Brave browser, we were able to kind of go through, and I kind of borrowed most of these from Brave. But again, it's kind of worth just kind of looking at, when you look at as a company, what do I need to do to go public? Or what do I need to do in order to be sold? This due diligence checklist is a great way for you to go through and get an understanding to the different types of items that you're going to need as a business in order to go public or in order to be sold. So I hope you found this helpful. Please feel free to leave comments below. Remember to like and subscribe. If you've got any questions, you can reach me at the comments below or send me an email. I look forward to seeing you on the next video. Have a great rest of your day, and I'll see you soon. Have a good one.